Welcome to The Informed Investor, where we break down the latest financial headlines, bringing in research and insights to help you separate the news from the noise.
Welcome, everybody, and thank you for joining The Informed Investor, a show brought to you by Dimensional Fund Advisors, a $900 billion global asset manager. And today's topic is artificial intelligence, and where does it fit in my investment portfolio? I'm Mark Gochnour. I'm joined today by Jake DeKinder and Dr. Wes Creel. And Dr. Wes Creel, this is kind of right up your alley a little bit, isn't it? Going back to your PhD.
It kind of is, amazingly enough. When I was probably my second year of grad school, we were doing all these like large scale molecular dynamics simulations, basically simulating the motion of a whole bunch of particles. And it's an exhaustive computing task. And so we were actually evaluating some what we called graphical processing units, these huge computer chips that could process lots of things in parallel. And oddly enough, they were made by NVIDIA. Too expensive for us for grad students, but it would have been really beneficial to our research at the time.
How much the stock did you buy in NVIDIA at that time?
I was a little short on cash as a grad student, so I elected to buy none.
If you only knew at that time.
Would have been great.
All right, I'm going to read a couple headlines. Jake, then I'll come to you and get your thoughts on these. All right, the first one. The AI bull market still has another 2 to 4 years left. And interestingly enough, this next headline was written the same day. AI stocks are in a bubble. Why are so many investors refusing to believe it? And then the last one here, which is fantastic. Is it time to sell your AI stocks?
Classic market timing. Classic market timing on that last one there, right? But then I was going to say the 2 to 4 year. I love the precision around there of like, it's like a 2 to 4 year window. You're like, if I'm going to be a market timer, I maybe need a little bit more help than that.
Well, we always talk about that. Some of the prognostications are oddly specific when it comes to those analysts. I actually have not a title, but an excerpt. I get really jealous when you guys are already reading the headlines. So I wanted to bring this one up because I think maybe it plays into the conversation today. Now, this is from James Cameron. Of course, everyone knows James Cameron, the famous director. So he was asked a question about writing science fiction stuff, like what was he currently working on? And he said, I'm at a point now where I have a hard time writing science fiction. I've been unable to get started on Terminator 7. Lord knows we need another one of those because I don't know what to say that won't be overtaken by real events. Essentially, we're already living in sci-fi. It's hard to write fiction anymore.
Man, I want to come back to that's crazy, that headline, right? But there's maybe a little bit of truth to that. That
Absolutely.
Stuff is evolving very, very fast. I think there's a lot of stuff that's coming out that's surprising people. I actually want to come back to your example from being a grad student, because everybody's talking about this idea of AI being something new, right? And I don't think you got your PhD a year or two ago. I know you worked at Dimensional about 15 years.
Feels like just yesterday, but it was a little while ago.
Right?
Yeah.
And actually, we've done an exercise where we've gone back and looked at different headlines. In fact, we had a webcast a number of years ago, or maybe a year, I don't remember exactly. But anyways, and we looked at these headlines that had come out, and one was from 2013, 2014, 2015, all around AI. And then we found that one, do you remember?
Yeah.
It said AI has reached the golden age. 50 years AI had been around. That headline was in 2006.
2006.
Yeah,
absolutely. So it's been around a while. And I just think about AI too, because it feels like to me, hey, what about AI? And AI is sort of just everything.
Mm-hmm.
And it's almost as if everything falls under that AI. And I guess I'll get your thoughts on this. I'll start with you, Wes. And the way I think about AI, to me, there's a couple of different areas there. One is it's just sort of natural evolution of technology. You've been able to do some things a little bit faster, a little bit quicker, a little more efficient. So for example, I can go to ChatGPT, do a quick search. It's much faster than if I went to one of the search engines and just had to scroll down everything. Or I can go to my phone. I can pay a bill in a matter of 10 seconds. It's not necessarily new. I could have written a check or gone to the bank, but it's just so much faster. So to me, part of it is just that normal advance of technology from efficiency. The other part of it is, man, there's some really new, really interesting, innovative stuff going on here that it's going to be fascinating to see what unfolds here when you think about bringing together a whole bunch of data out there in ways we just hadn't quite thought about connecting it. But, we'll talk about AI here, but how do you think about AI and a lot of the questions you get from folks when you're out there meeting with clients?
Yeah, and I should say I'm far from an expert on AI type algorithm development, but I think my experience as a grad student provides a little bit of context for what I think is the big breakthrough here, which is being able to process a lot of information simultaneously in parallel. The operational efficiency of these, what they call large language models, of summarizing things from anywhere on the internet whenever you query ChatGPT, that really comes from their ability to organize and access very disparate pieces of information and bring them together, almost like a neural network for the human brain can process things. And so I think that element of it is a pretty big breakthrough. Certainly part of the reason why we had a recent, you mentioned the stuff, the idea has been around for a long time. Part of the reason for the more recent breakthroughs is the computing power. And I think that's really where you're seeing a lot of the operational advances.
All right, Jake, you meet with a lot of clients, both financial professionals and investors out there. What are some questions you're getting from investors that we're going to tackle here today?
I mean, we're out meeting with investors all the time. We're meeting with financial professionals all the time. Three big ones that I think pop to the top of the list of what I hear, if I can kind of group them together. One is it somehow going to change how markets function, meaning how buyers and sellers come together to transact and to set prices. The second one is, does it somehow give certain people a competitive advantage in the marketplace, allow them to pick stocks better, time markets, as we were referencing, all of those things better. And then the third one, and this one maybe comes a little bit more from the investor side, is either am I missing out, or how do I play this as an investor, right? I've heard about NVIDIA. I've heard about all of these companies. A lot of them have had incredibly strong returns. Am I somehow missing out on all of this stuff that's being discussed around AI? And how do I get me some of that?
Well, maybe we start with that one, kind of running with that a little bit on the context of how our company is using AI. Like, am I getting some exposure through various companies, or do I have to go directly to an AI-oriented company to get that?
I mean, depending on how they're using it, there's probably not going to be any companies that won't eventually be touched by the idea of artificial intelligence. We mentioned operational efficiencies, being able to, service your customers more effectively, or even some of the cool one. We've talked about some of the companies that we observe are in these artificial intelligence focused strategies out there. And some of them are that really sci-fi sounding, right? Companies like Caterpillar, companies like Honeywell. I don't think of those as being part of the plot for the next Terminator movie, but they are, in their own way, using artificial intelligence tools to grow their business and further their growth.
Well, it kind of goes back to, it's been around a while.
Mhm.
I remember you were joking as we were talking about this episode about Clippy.
Yeah, that was
Remember-
my first experience with AI, right? So you start typing in Microsoft Word in the late 90s and you say, "Dear John," put a comma after it, hit return, and then it would pop up, the enterprising paperclip known as Clippy, and he'd say, "It looks like you're trying to write a letter. Would you like some help with formatting?" And that is a very rudimentary version of what we now think of as artificial intelligence deployment, which is recognizing a pattern. Now I can recognize a pattern because it's been fit to previous circumstances or data, and then making a prediction or offering guidance or summarization from there.
Sorry, go ahead, Jake.
Well, no, I was just going to say, how are companies using it? I think, at least at a high level, I think every company's figuring out how they can use AI to make their businesses more efficient, to reach new markets, to segment their customers better, to learn more from the massive amounts of data that a lot of these companies are already. I mean, you had years where people were sitting on data and didn't know what to do with it inside of companies, right? So then I think about it from an investment standpoint, and you're like, well, how do I play that? And you're like, well, if every company's out there trying to figure out how they use AI to make their operations more efficient, to improve cash flows, better profit margins, all of that, the way I play it is I invest in all of these companies. It's a broadly diversified portfolio. And the one that we always reference back to is, something like the barcode. When the barcode was invented, was it just the company that invented the barcode that benefited from that and the people that invested in that company? Or do you think it also probably helped a lot of the other companies that figured out how to incorporate the new technology into their operations, right? All of the retailers, all of the shippers, all the ways that you can use that technology. And I look at it from a very similar standpoint of where we're at right now. So I don't have any FOMO that it's somehow missing out, as long as I think about it in terms of broad exposure to a lot of companies.
When you're getting that, if you just look at the holdings of these AI-focused ETFs, we did a little study with the top 5 largest AI-based ETFs, and if you look at their holdings, over 40% of that was overlapping with the market portfolio.
Mhm.
So if you have a broadly diversified portfolio, you likely are holding a lot of that stuff that people believe is ultimately going to be a beneficiary of AI.
When you mentioned one of the names earlier, I think Caterpillar.
Yeah.
I think that's one of the holdings in some of those ETFs you just alluded to, in those top 5 ETFs around AI. And you think, well, Caterpillar, or I think Deere companies in there, you think, well, how can that be? It goes back to some of these examples where this technology's been around a while. And I think we've all been to our Australian office down there doing some work over time. And in Western Australia, you have these massive mines. And I think all these 300-ton dump trucks, I think it was the late 2000s, like 2008-ish, is when they just started running 24/7 with no drivers. It was just all through GPS, different radars, sensors to where they're going. And I think since then it's been much safer than having a human driver. So to me, that's an early form of, again, some of this AI that's been driving this. And to your point about efficiencies that we all benefit from, somewhere in a globally diversified portfolio, all the companies we own, it's finding its way into all these different companies.
Yeah.
You can really take comfort of that of any time a new technology comes out, right? I mean, if you go back through time, new technologies come out, companies adopt it, they figure out, and by the way, those that don't can very well go out of business, which is why, again, if you go from diversification to concentration, you can run into some issues there because you're basically betting on, will this individual company adapt to a changing world, which is always taking place.
This is a bit like the .com revolution, right? I mean, how often do you guys buy anything on pets.com?
I do not on pets.com, no.
So I think that was one of the challenges back then was, okay, we think that the internet revolution is going to impact every company out there in some way, shape, or form. I just don't know who's going to be the winner and who's going to be the loser. NVIDIA looks like they were an early winner, but we don't know whether companies are going to be able to leverage as better than their competitors and truly outperform.
By the way, mascot for pets.com, do you remember it?
The sock puppet?
Talking sock puppet. Always a good investment.
How could we forget?
That's right.
Let's hit your other question, Jake. Does AI give you some competitive advantage when it comes to investing to somehow create this crystal ball, perhaps, that's been missing prior to, I guess, the ability to use AI in whatever shape or form about predicting future prices in stocks or bonds? I'll start with you, Wes.
Take that one, Wes.
Yeah.
Yeah, I mean, okay, what it would have to do to give you an advantage over other investors is make the information retrieval superior in some way. Either find information that's eluded to capture the rest of the market or allow you to access it more quickly than anyone else out there. You know, we see in the data, I mean, last year in equity markets alone, there's about $800 billion worth of trade volume on a daily basis. That is a lot of activity looking for information that is not market prices. That is really what keeps markets in equilibrium and makes it very challenging to outguess markets. And so you think, okay, well, maybe these AI algorithms can find something out there a little more quickly and get an edge. But, you know, you look at the historical data around the paucity of managers who were able to outperform the stock market. There's not a whole lot of evidence they're missing out on anything because so few of them could add value over index benchmarks. And, you know, if they do find something, let's say they find a new avenue to quickly access something that everyone else is missing out on, that's kind of a one-time thing, right? Once you discover that avenue of information retrieval, then it becomes part of the market's information set and it's no longer usable for something like alpha out there.
And by that, you mean once it's starting to be traded upon, then it's out there. People are going to observe.
Trade it, get
the
into
trading,
prices.
and
Maybe they
then-
make money
yeah.
on a one-time event, but then at that point, that's not a continuous basis for outperforming
Yeah,
markets.
it's probably observable somewhere in the marketplace, perhaps.
Well, you go back to, I mean, I'll just talk about sort of the advancement of technology through time. I mean, the first studies on manager performance, outperformance versus sort of a passive buy and hold benchmark go back to the mid to late 1960s, right? And since then, we've had a lot of technological advancements. And yet, when you still look at the data through the decades, and we've run plenty of these studies, other companies have run plenty of studies, lots of academics, you know, you don't really see too many professional managers outperform a passive sort of benchmark than what you would expect by chance. So yes, it is different. Yes, it is new. Yes, the computing power is stronger. But again, I think probably all along the way, people were making a similar argument. And what the evidence shows is we haven't necessarily seen anybody really get an edge.
You remind me of a story. Dan Wheeler,
Yeah.
a longtime colleague who started the advisor business here at Dimensional. This was around the tech boom in the late 90s. And he was having breakfast and he heard somebody over talking in the booth next to him. And somebody was just telling their buddies, like, all I need is a faster computer. My trades will get in faster. They don't make all this money in my day trading approach.
Yeah.
Because whatever he was doing wasn't working.
People have been making this argument forever, right? But the problem is that the future is unpredictable, right? And so even with even with the best models, even with the best data, the ability to extract it, to piece things together, to do all of that, you don't know what's going to happen in the future, and you don't necessarily know how markets will react to future events. And we've got a lot of evidence of that. We cite 2020, and I don't think a lot of people, if you came to them in January of 2020 and said, here's what's going to happen in late Feb and March, do you think the market's going to be up for the rest of the year? Not a lot of people, would have said that. And there's a lot of these examples through time, and that's hard. You can't predict the future, and you can't predict how markets will react to future events.
It's a good point about not being able to predict markets, because, we know based on the automated vehicles, the Waymos, we're starting to see more and more in Austin. We know they can predict when to stop at an intersection because they look up and they see a stop sign, and they know that's their indication to slow down and stop. But then, you think about why they can actually make that determination that it's time to stop. Well, because they know what a stop sign looks like. They know what a stop sign looks like because it doesn't change from one day to the next. It's not octagonal today and hexagonal tomorrow. And that's the challenge with trying to predict market movements, is if you're going to try and fit it to data, well, stock and bond returns are incredibly noisy. And, the correlations across different securities are not long lasting. There's no stability in the patterns. You can't just fit it to a data set and say, oh, now I'm going to make a better prediction of the future, because it's likely to be garbage in, garbage out in terms of the noise level.
Well, and it's not saying here that, somebody using AI to try to manage money is necessarily going to have a lot of trading, but it's a potential, right? I got a lot of data that's coming in. There's a lot of noise in markets, right? I do a lot of trading. Now my cost could be higher. I got to think about taxable events. So there's a lot that you really have to think about once you go down that path of, here's how I'm going to use massive amounts of data to do a whole lot of movement inside of how I'm managing money.
When you talk about noise, are you just talking about how fast and to the degree prices change immediately in stocks and bonds?
Yeah,
exactly.
What you mean
about noise?
Yeah. Stock and bond returns are incredibly volatile, especially on an individual basis. You look at the overall market's return, you get diversification across these securities, but on an individual stock and bond basis, these things are very volatile. And so trying to, anytime you're trying to get a model that does a good job of predicting things in the future, it's really a signal to noise ratio calculation you're doing. Well, no matter how strong your signal is, if it's completely drowned out by noise, it's not going to be additive to your process. And I think that's where, look, these artificial intelligence algorithms are going to do lots of potentially great things or informative things, but doing better than the stock market, I think, is a really high bar to set.
And as an individual investor, you have to ask yourself, do you really have to play that game to have a good investment experience, right? And we say that all the time. I mean, yeah, do you want to have higher returns? Do you want to do all of that? Sure. The downside could be you don't get the higher returns. It could be more costly. It's a tax efficient way to go versus, are you saying I want to have a sensible long-term approach that helps me reach my goals and not necessarily stress about a lot of the noise maybe that I'm hearing out there?
I'm going to go back to what you said about sort of the patterns, right? Where AI is really good when there's a pattern you're following, but because the prices change so quickly in stocks and bonds, there's no way to really use that pattern to identify the future because the future is always uncertain, right? So I think you summarized that really well there, Jake, about you can have a very successful investment experience without having to try to time the market or predict what's going to happen in the future. Yet you're still getting the benefits of all this AI out there through these companies that are using it globally in creating more efficient operations.
You also want to think about what expectations for the future are already priced in. So the companies that we believe are going to benefit greatly from the expansion of artificial intelligence algorithms, it's probably already priced in. Like if people think this company is going to do particularly well, they're going to be willing to pay a higher price. Honestly, when we look at the data around a lot of these AI-focused ETFs, a few of them have done better than the broad market, but only maybe one or two have done better than the tech sector. And that's a useful benchmark, by the way, because a lot of these early movers are technology companies. But then when you control for that element of the performance in markets, they don't seem to be delivering anything special because, again, the extent to which that's already expected, it's going to be priced in. You're not going to generate abnormal returns from it.
And we know tech sector has done well recently. That just is what it is. So almost by default, companies that sort of operate in that space have probably done reasonably well. But it's an interesting data point you cite around the ETFs that are specifically focused on that.
I liked what you said too about when we know today's already reflected in prices, and then whatever's going to be revealed in the future, at that point, it'll be revealed in prices.
Yeah, you get market movements then,
well, right?
Yeah. And if you knew exactly which companies were going to get unexpectedly good news in the future, yeah, you would absolutely want to load up on those.
Well, and like any of those new technologies, we know there's going to be positive elements of it and there's going to be negative elements of it. We don't need to get into a societal discussion as well, but that also can sort of translate into what that might mean for you as an investor if you go down too far down that path of concentrating on, I want to load up on XYZ technology because we don't know what it's going to look like in the future.
Well, I might have some kinks to iron out too. I know that we were talking about this before, but one of the liquor stores that's right down the street from here, their vendor uses artificial intelligence to sort of, I guess, quick check all of the orders that come in, and if they're outside of cluster, as they describe it, so something that looks abnormal for that time of year, that particular brand, then they'll reject it. And so they were having some teething issues in terms of properly stocking their store because the AI algorithm kept saying, "Nope, you don't get that many bottles of it."
And if I know where you're going with that, particularly that weekend, because there was a University of Texas game and their big annual sale was around the same weekend. So I imagine there's a huge cluster.
Yeah, well, that might have been a good example of an outlier where the AI algorithm hadn't even considered the possibility that there was going to be a sale at this liquor store and UT was going to have a home football game, and you can't be running out of Tito's when you have a home football game in Austin.
Seriously, man. I mean, unless UT doesn't start playing some better football, man, for God's sakes.
Well,
maybe I need more Tito's or less. I don't know how it shakes out.
And the tough ones are coming too.
That's right.
Yeah, you'll need more Tito's for the October games. All right, so I go back to those three questions you brought up at the very beginning. I guess the answer to me, what I'm hearing is global diversification works. I should say global diversification works because you're going to get exposure to all of this AI. And there's nothing we've seen yet or really would anticipate that can somehow identify the future. Anything else you'd add to that?
You put it succinctly. It's one of my favorite quotes, by the way, from Robin Hood Men in Tights. The guy says that, and no one else at the table has any idea what he was talking about. But I think it's a really nice way to describe the way you summarize things.
I like the Simpsons one where they're on the ship and he says, "I'm a man of few words. Any questions?"
We're going to have to turn this into just a movie and TV show review podcast at some point.
And with that one, thank you for joining the Informed Investor today. Be sure to hit the subscribe button and have a fantastic rest of the day.